Welcome to Zanaco Unplugged, the podcast that takes you inside Zambia's biggest bank and brings you conversations with business leaders and creative pioneers. Join us every second Thursday at 10 hours for conversations ranging from leadership and tech to innovation and sustainability. Learn more about the business and creative landscape by subscribing to Zanaco Unplugged on your favorite podcast platform. Search for Zanaco Unplugged and hit the subscribe button. We'll see you every second Thursday at 10 hours. Welcome to Zanaco Unplugged, the podcast that takes you inside Zambia's biggest banks and puts us in conversations with industry leaders and creative pioneers. On this episode, we're talking about debt restructuring that, of course, everybody's been talking about from the news. And the president was in France and we heard about debt restructuring. But what exactly is debt restructuring? To break it down even further and explain it to us in, layman's terms, we have in the studio with us today Mr. Mutisunge Zulu, who is the Zanaco Chief Risk Officer, to explain to us further what debt restructuring is and what it means for our country. Mutisunge, welcome to Zanaco Unplugged.
Thank you so much, and thank you for hosting me.
You're welcome. Let's talk about debt restructuring. Of course, we've been hearing this word in the news a whole lot. I think before we delve into anything, just explain to, those of us who are not in offices or with education like yours, what debt restructuring is.
Okay.
Yeah.
Okay. So restructure in itself is a word and means reorganizing, reframing, rearranging, or rejigging. So in the context of debt restructure is merely a rearrangement of obligations. So if an individual owes, if a country owes, and owing can be burdensome, and they don't have, the money to pay, then restructure, a reorganization, a rearrangement can happen to provide or to enable a party that is owing to be able to service and meet their obligations. It does take the form of so many things. It could be a lengthened period. You were owing for 5 years, and the restructure could, lengthen the period to maybe say 10 years. So by so doing, you have spread out the obligations that may be a little bit more affordable to the party that is owing.
So basically giving them some breathing space to pay the debt off easier.
That's the word itself. Gives you latitude, breathing space to be able to meet your obligations. So usually when nations start having restructure conversations, means that they're in distress. They're so constrained. They have no breathing space. Debt is choking them to the extent that whatever they're making in terms of revenues is all going towards paying debt. Imagine us at individual level. If you are an individual that owes and you are, drowning in debt, all your money goes to debt service.
You can't progress.
And then, exactly, you can't progress. And then it's always at the expense of your growth, your development, and
Mutisunge, in 2021, if I remember correctly, it should be September 2021, you were on the Sunday interview and you were deliberating on the need for debt restructuring in Zambia. And then 2 months after that, HH comes into power, and now here we are with this $6.3 billion, bilateral, what should I call it? A debt treatment of $6.3 billion.
Yes.
What does this then mean for a country like Zambia? And you are like a prophet talking about debt restructuring then, and then it happens this year.
Oh, wow.
But then again, what does this mean for a country like Zambia, this debt restructuring?
Okay, so first of all, I'm truly humbled that you remember. That was on the 26th of September.
Yes.
In fact, it was a few months after President Hakainde Hichilema has come into power. And then I featured on Sunday interview. And and I think I did highlight the need for Zambia to restructure its debt because Zambia was already in distress at that point. Debt to GDP was through the roof. It was very high. Debt was unsustainable. Allow me to sort of give you a trajectory of what the journey has been for Zambia. Some of it I know is contained in the ministerial statement. He did share something with Parliament yesterday. A little trip down memory lane. 2011, Zambia's external debt was $1.87 billion, and 9% of all the revenues that Zambia was generating was going towards debt service. Okay? Fast forward, 2020, that debt had ballooned to $13.04 billion, and 51% of all the revenues that the country was generating was going towards debt. To compound the mystery, 43% of all the revenues that Zambia was making was going towards the public sector wage bill. If you add 51 plus 43, that's 92%. 92% of all the revenues Zambia was generating from taxes, from exports, was all going towards paying public sector salaries and debt, which only left the country with 8% to grow the economy. I just wanted to amplify and give you an understanding of how serious and dire the debt quagmire was. So what that meant was that Zambia was constantly borrowing to be able to meet its other obligations. So 8% of revenues was going towards social sectors. My grandma in Kalingalinga has social cash transfer issues, medicine in the hospitals, which is your health care, education.
That's very little.
And education is very critical, and it adds on to the quality of labor as a factor of production. So I wanted to give you an idea of how unsustainable it became. Between 2020 and 2021, 71% of all revenues were going towards debt. At 40, we've now exceeded 100. That was about 113%. So Zambia needed to constantly borrow. So the borrowing position was widening this debt. And that is why the nation ended up defaulting in 2020, that's November. Then came COVID-19 pandemic.
Made things even worse.
It exacerbated the fiscal position. Inflation started to widen. There was exchange rate depreciation, not to mention the impact on individuals. So there was that rearrangement of the fiscal purse, because whatever little monies there was now going towards healthcare. So that just worsened Zambia's position, and Zambia ended up being the first nation to default in COVID-19 pandemic. Only challenge with that was it was a unilateral decision. Unilateral meaning you are the only party that has decided to say, I'm not going to pay anyone anything. Anyone I owe, I'm not going to pay. That was unsustainable. It's reputational in nature. Your credit rating deteriorates. We were default rated by the rating agencies. Your Standards and Poor's, Moody's, Fitch, default. When you default, no one will give you money. Our credit lines shut. It became very difficult. So where was Zambia going to get money to continue to grow and for the government to finance its programs? So I thought I should just give you history, trajectory, an idea of where we're coming from, because many times individuals have these conversations in isolation without understanding what the journey has been. Come August 2021, there was a leadership change.
Yes.
It's a testament. What we're seeing today is a testament of what leadership, the right leadership, can actually do. I come from a risk background.
Yes.
Zambia's political risk was so high. You would not talk about any transaction in the international market without individuals pricing in political risk posture. And that causes interest rates to be very high. It caused a lot of uncertainty. But with the change in leadership, there was a sentiment boost. Your exchange rates appreciated. Remember, the first few days, strengthened. Investors now started looking at Zambia as a preferred destination. That was the genesis of Clarity. 12 months after ascension to power by the current president, His Excellency President Hakainde Hichilema, the IMF board approved $1.3 billion in extended credit facility to help Zambia. Between August and August the following year, we saw some remarkable strides where I think it's never heard of in history, where a sitting president is actually in the forefront, engaging creditors, engaging people the country owes money, engaging multilateral chiefs, speaking to David Malpass, the former president of the World Bank, speaking to Kristalina Georgieva about giving that commitment to restoring fiscal fitness. And that's the kind of leadership traits that have landed us where we are as a nation, because it brought a confidence surge where those negotiations, even as they were happening, creditors were now beginning to see light at the end of the tunnel. The global world, the environment rallied behind Zambia. The Emmanuel Macron's was co-chair of the official creditor committee alongside China, and the vice chair was President Cyril Ramaphosa. Taking you back to when we defaulted, the G20, which is a group of rich nations in the world, realized that, you know what, with the COVID-19 pandemic, there was a lot of distress, especially for emerging and frontier markets. So they decided to come up with an initiative called the DSSI, which is your Debt Service Suspension Initiative, that supported for a halt in debt payments for emerging markets, Zambia inclusive, of those nations that were in distress. However, the payments did not stop to multilaterals such as your Africa Development Bank and your World Banks, because remember, those ones really need to continue helping other individuals. So then with that, the next stage was, can we come up with a framework, which is the G20 common framework, where with the support of those 20 nations to say, can we find a sustainable way of starting to engage these people that are owed money? And that marked the genesis of a more robust and clearer restructure conversation. And that's why this debt treatment for the $6.3 billion was under the G20 common framework. It's the first ever deal to be achieved by the G20. And that's why Zambia has made headlines, because any other nation that is currently in distress is looking at Zambia as a case study.
I'm reading off something on this website, which I'll not mention right now, but this week is said to have seen the biggest jump in the kwacha, exceeding the 200-day moving average.
Yes.
What was really driving this volatility? And then again, was it linked to expectations around what would come out of the finance summit in France?
Thank you so much for that question. So yes. So your financial markets are driven by information, data.
Yes.
And it's called the value of perfect information. So markets were taking positions after having priced in news of a likely breakthrough for Zambia. I think markets had constantly been looking for clues surrounding debt restructure. It started with comments by Ministry of Finance officials, IMF officials, and it became so imminent that the expectations were sanguine. We felt it, that within the week at the Emmanuel Macron's Paris summit, something good was going to come out of there. So for those that have ears and heard, started taking positions, because it became very clear that there was some sort of breakthrough. They say smoke fire. There is no smoke without fire.
Yeah. True.
So yes, so there was that pricing in. So the reason why you saw your exchange rate move like that is because you have people that always hold on to foreign currency such as dollars, because ideally, because of all the risk that we had in this market, people felt much more comfortable holding their liquidity in dollars than in kwacha. But with realization that with this breakthrough,
the kwacha is getting changed quickly.
You could have bought your dollars at 20. You don't want to keep them all the exchange rate.
That happened to me, because remember the change happened in a space of 2 days?
Yes.
I changed on a Wednesdays at 20 and I hold on to it. The 2 days later it's at 17. What a huge loss I made, man.
So there are people who speculate.
Yeah.
There are people who understand these markets, and so the reason why you saw that was because people started offloading dollars. You start offloading because you don't want to take a loss for the position you took. So quickly you sell your dollars, and there was also flows coming into the country, because there are people there was a bond auction happening on a Friday, and the expectation was, if you can't lock in those high yields, there will never be a time when you would get 27% on a 10-year bond. So it was a plethora of a number of factors. But whatever the case, it's also an indication. You see, this is how we need to start looking at our exchange rate. Our exchange rate is not just a number. It tells us something about the state of the market.
Macroeconomically,
and that's the certainty that I keep on preaching about, and the up and down is what you call your volatility. So because certainty was coming back into the Zambian economy, people smelled the coffee. They started to offload dollars. And now it's settled, you can see. And that's what stability is. Now you can imagine if the entire debt stock is fully restructured, then you expect a stabler currency.
That's one of the positives. What are the key positives we can expect from this, debt restructuring?
So, first of all, let's look at it this way. For a very long time, the government was constrained. Couldn't do a number of projects. I mean, even if they built schools, they could have built more.
Or better.
Resources are always scarce. I mean, they teach this in economics. Maximize what you can with
what you have
given, which is more like a constant budget line. So it frees up resources. Part of the savings Zambia is going to make in debt service is about $5.8 billion. Minister did share it yesterday.
Yes.
So the interesting thing about this is, maybe before I delve into that question, maybe just a bit to explain some of the conditions that characterize this restructure. It's with bilateral creditors, number one. Number two, it's lengthened all the way up to 2043. That's 20 years.
20 years.
There's another condition there. If you read the ministerial statement, the other condition is that should Zambia's service capacity improve, there is a chance that the deal could even accelerate repayments up to 15 years. We might not even do the 20 years. By the time it's 15 years, Zambia would have dealt with the obligation. A joint assessment will be done by the IMF and the World Bank periodically to assess what our service capacity is. Right now, we are rated weak. We're in distress.
Yeah.
So if it improves to medium, there is latitude for improvement and accelerated. Think of it this way. If we're swimming in debt and then your repayment capacity has started improving, maybe you got another job, can actually accelerate and speed up some of your yes. So interest rate somewhat just below 1% for the 14 years. Imagine who's going to give you money at 1%.
That's almost free, to be honest.
And that's the plus. And that's what a lot of people are overlooking. Of course, it will run up for 14 years and then it could actually jump up to 2.5% depending on how we do as a nation. Okay. So that's the those are the nuances around what this deal is about, and the next stage is for the memorandum of understandings to be signed, because the deal was agreed in principle.
Yes.
The work now begins because legal agreements have to be executed and signed. So coming back to the benefits. So because you have savings of 5.8 billion, imagine what you would do with savings of 5.8 billion.
And this is in dollars, by the way.
Yes, but
that's
dollars.
A lot of money.
I beg your pardon. I mean, I always forget to put the currencies.
No,
5.8 billion.
And I said that for emphasis' sake.
Yes.
It's a lot of money.
It's a lot of money.
Yeah.
So one, government's agenda, infrastructure, number one. We have an opportunity to get the infrastructure. There's an infrastructure deficit generally in Africa, and Zambia is part of Africa. That's number one. So your rail, your roads, where you're seeing tear and wear, there has to be fixes there. But of course, this time, look at it from a sustainable perspective, where if you are going to go into infrastructure development, there'll obviously be cognizance to ensuring that it's done in a fashion where if you build roads, they would have toll gates. So the debt becomes self-servicing. Yes. So you're generating. So yes, you built a road and then there are toll gates. There's money coming in.
Itself.
That is what Zambia lacked in the past. Because most of the infrastructure that was built, there was nothing to point to that was bringing about cash flows. And that's how come we're failing to service the debt. So the other areas would be your social sectors. Simple example. Let me bring it back home. CDF. CDF is a successful decentralization of spend. In short, what am I saying? You don't have to believe in coming to Lusaka thinking that that's where economic activity happens. So the decentralization now was taking monies to the districts. Kawambwa, to
Chipatande, the furthest parts of this country.
Exactly.
Yeah.
So that was 26 million allocation per district. The breathing space that the restructure creates widens the possibility of a bigger CDF. Imagine what a bigger CDF would do to districts.
Yes.
It's development.
You know, speaking of CDF and talking about this debt restructuring on a local level, we're told, you know, the deal brokered does not cover domestic debt. What does this mean? Or is that a good thing?
Okay, let me start with the last question. Is that a good thing? It's a very good thing. Let me put it in layman's language. So, if domestic debt had been restructured, there are chances that there was going to be a haircut. So let me explain what a haircut is. If I owe you 10,000 kwacha and I can't pay you the entire 10 and I can only pay you 7 and you accept, you would have taken a haircut of 3 kwacha.
Yes.
That's what a haircut is.
Right.
I thought I should just define it for the benefit of everyone, because you see in finance, you'd get carried away using jargon and lose people. That's a haircut.
Haircut sounds more layman, yeah. Thank you very much.
So the question is, would you accept to take a haircut on an investment? Let's say you reached retirement age, you got your pension, and you bought treasury bills and bonds. And you were expecting, you invested, let's say 10 million. And they tell you to take a haircut of 30%. So would you accept a given
3 million
7 and lose your 3 million? You wouldn't, because it would have implications. Most so. Where do we draw inference around this haircut thing? It happened to Ghana. Ghana's restructure discussion included a 30% haircut. So imagine everyone that has invested takes a knock of 30%. Imagine what the implications would be for any economy. For banks, some of them, capital levels have gone down and they need to recapitalize. So is it a good thing that we didn't take a haircut on our domestic debt? It's a good thing. In fact, for me, it's the best thing that happened to Zambia. Haircuts, restructure of domestic debt does destabilize the financial system. In short, restructure means, guys, you go and take losses on your investments. No one wants to take a loss on an investment of some sort. Yes.
So what are the next steps in this process?
Next steps, execution of MOUs, which is Memorandum of Understandings, with individual creditors, because there's a number of them.
I think I should add, how does this then, impact the negotiation around the Eurobond?
The two are related. When I explained the first time Zambia ever defaulted, I talked about the debt service suspension initiative by the G20. Then it evolved into coming up with a common framework. Then creditor committees were formed. The complexity of owing creditors is that there are many. Your Eurobond holders can even be over 1,000. You don't even know them because bonds change hands. Yes. Maybe the people that are holding your bonds this time are not the people that bought them the first time because this one sold it just like that. Yes. So they then formed an official creditors committee. It becomes easier to speak to your creditors at committee level than for us to start negotiating one by one, because if I give you a deal that's not fair, you're going to complain to the other person and then, yes. So after that, the bondholders made it very clear that they wanted some sort of transparency in how creditors were being treated because they were advocating for equal treatment across the board. One condition they put was, what is the IMF saying about this? What is the World Bank saying about this? That's how come Zambia ticked the box off by getting an IMF deal. Because remember, your IMF is a financial institution. It's a multilateral. It's in fact the biggest financial institution. So your creditors, your bondholders are saying, what's the largest financial institution saying? Can they not help you? Let us get some sort of a guarantee from them that they've kept your spend in check, that they are willing to help you with things like your balance of payment support. So when I say balance of payment, in simple terms, what I mean is you don't want to be at any point in time when there are no dollars in the country and you can't import fuel. That's what BOP does. So by getting onto an IMF program, it was 1.3 billion.
Yes.
Let me clarify one thing. A lot of people think that 1.3 billion was injected into the Zambian economy. No, it's a credit line. It's disbursed in parts. First tranche was given $197 million that September. It was a good thing. The economy felt it. Currency appreciated. There was some sort of stability. Second tranche was due, 188 million. It has not been disbursed. You know what the condition was?
Tell us.
Go and get assurances from creditors. And what you got last week were the assurances that were being sought. So they could not disperse it. You can see that even them, they're trying to make sure that you meet certain requirements that are pushing you and getting you towards fiscal fitness, discipline, and the economy growing in a direction that it should be. So, your Eurobond holders said, what is the IMF doing? We got onto an IMF program. And that's why I keep saying an IMF program is a precursor to debt restructure. Next point of call, now that you have an IMF deal, what are your bilateral creditors saying? Your official creditors. First of all, convince us that you can get them to agree to some sort of restructure. Then we can talk. Your official creditors have given those assurances. Chances are that in the next coming weeks, by the time the IMF board is sitting, 188 million will be dispersed. So you can see that that's one of the benefits of the treatment, because it's unlocking other disbursements from multilaterals. The World Bank has given Zambia $1 billion. I mean, World Bank President Ajay was on record, that's virtual, with the president yesterday, confirming the World Bank has assisted Zambia with $1 billion so far. That's last year and year to date today for social projects.
Right.
So the answer to your question is that now that the official creditors have provided assurances, the IMF, World Bank are on board. It should make those conversations easier. They've already started, but now the expectation is that what will a restructure look like for dollar bonds, that's your euro bonds, and other private creditors as well? Because the next point of call is meetings with the committee for Eurobond holders. Eurobond debt is very sticky, despite it being only 3 billion. You know why? It's the only debt that's graded. You don't need a credit rating to go and get bilateral debt, but you need a credit rating to go to the international capital markets and issue a bond. So only when we restructure Eurobond debt will Zambia's credit rating change. Are we optimistic that that will happen? More than ever.
Interesting. Speaking of optimism, with this debt restructuring, is the banking sector excited? How does the banking sector benefit from this debt restructure?
Good question you've asked me. Let me start with a sad story or sad analogy. Do you know that this whole debt issue is sovereign in nature, and sovereign risk posture for Zambia has been the biggest headache for any financial institution?
Explain.
The same way Zambia's credit lines were closed and narrowed for Zambia, meaning it couldn't access credit lines outside the country, is the same way banks as well have had it hard to get credit lines.
So this opens doors for the banking sector as well.
Credit lines open.
Yeah.
Risk appetite changes. There are certain sectors that banks were very careful not to play in, or else you'd get your fingers burnt, because they were very much linked to the sovereign posture, to the posture of the country. That landmark development last week opens up possibilities. It eases and increases risk appetite, because you know what will happen? One other benefit of that is FDIs. When that FDI comes in, it flows through the veins of the
banking sector. What's an FDI?
Oh, sorry, foreign direct investment.
Right. Okay.
So they keep saying, when we restructure our debt, we expect that our FDI flows will increase. That's your foreign direct investment. That's investors now bringing their money into Zambia. When they bring their money, it doesn't come in suitcases. It comes through the bank. So the banks will see more liquidity, more dollars coming in for projects like mining, for projects like agriculture, for projects like technology projects, that wide array of projects. So you can see that banking sector facilitates intermediation, and we are the conduit for all liquidity. And with that said, you expect lending to improve. Banks took a knock years back in non-performing loans, and the bulk of those non-performing loans were actually linked to sovereign posture, because the government owed SMEs, contractors, money. Remember, there was that dismantling arrears. The arrears are being dismantled, and there's been great work going around arrears in dismantling. So what happened was you had businesses that went to the bank to get loans to be able to execute projects for the government. And because the government took too long to pay them, they defaulted with the banks. So banks had to take write-offs. And a write-off is a cost. And you take a knock. And because you've taken a knock, you've learnt a lesson. And that's a sector that you don't want to play in. But with that development in itself, I thought about it and I said, you know what? This is a big thing for Zambia. And I'm glad we're having this conversation. Do you know that because credit lines had shut, the government was borrowing domestically through the treasury bill and bond markets, which was a solution then. But you know what it did? It overcrowded the market. So that money that was supposed to go to an SME, I know we're in SME month, the money that was supposed to go to the SMEs was going to the government. And that's why interest rates were high.
To cover up.
So what then happens is one other positive, this development, is that that money will now be available to the SMEs. It frees up because now the government is not burdened to be servicing debt as much as it would have had to service if there was no restructure. That's what it means.
Right.
But this is not going to happen overnight. And this is not going to happen without certain things being put in place. There's the private sector side. We talked about the stability that is coming in the foreign exchange market because of clarity as to where this economy is going. And you've got all those flows coming in because when the flows come in, they come as dollars, not as kwacha. So that has an impact on your exchange rate. So you expect a stable exchange rate. You expect your interest rates to come down. These two factors I've spoken about are the two ingredients that the private sector has been crying about all this time. Interest rates, high. Foreign exchange, volatile. It's very difficult to plan. These two then help with the ease of doing business. That then creates a conducive environment for the private sector to thrive. It is the private sector that drives growth. This then coupled with some of the lessons that we have learned since independence. Some of the lessons we've learned since independence is that we've been talking agriculture, arable land, river bodies. But do you know how much agriculture contributes to Zambia's GDP? 3%.
With all this land we have in this country.
Yeah, it's only 3%.
Fertile land.
Much as it's sad, it's an opportunity. But what makes it sad is that this opportunity has been spoken about since independence. There's just somewhere we're not getting it right. People who've been small-scale farmers in the 80s are still small-scale farmers in 2023. I remember Honorable Magande. I had a conversation with him and he says, when I was MD of PT, Lima Bank. He says it's the same people, they're not growing.
Yeah.
So there has to be that realization. In the mining sector, there's items of issue such as we've always been exporting copper. No one talks about copper wires. So we want more Zamefas. We want more newcomers so that instead of exporting route copper cathodes,
we are producing
copper wires. Because guess what? The same copper that you export to China via Switzerland and they go make copper wires are the same copper wires we are importing. So
we're buying back our own process.
Yeah, so I just wanted to give that. And then manufacturing as well. We talk about value addition. There was a paper that was done by the World Bank. It was called Agro-Led Structural Diversification in 2005. It was very clear that the easiest way for Zambia to boost its manufacturing capability would be through agro-processing. Grow a lot of foods. Process your hides for leather, and then that then sorts out the manufacturing. So there's a lot of work, Kalanga, in this other area that, you see, I've listened to people that have talked about, 20 years, we've passed this debt on to our children, we've passed this debt on to our other generations. But the truth of the matter is, we should be thinking, what can we do in this 20-year period that can turn around our fortunes to double our GDP. You see, the thing about it is, your debt is this side, it's constant. But reality of the matter is, when you grow your economy, you dwarf your debt. So only worry about that if you're so sure that you will fail to grow your economy.
They're inversely proportional.
If you are earning 20,000 kwacha and you've got loans worth 10,000, it's taking up 50% of your income, isn't it? If you get another job that triples your salary, will you feel the same impact on a 10,000 that you're paying in debt?
It gets dwarfed.
It gets dwarfed. If Zambia's GDP, imagine if Zambia's GDP was to grow to $100 billion, would we be worried about 6 billion? No, we wouldn't.
Mutisunge, I think you've really, explained that even us laymen, people not in the financial sector, have understood debt restructuring a little bit more. And I think we share your excitement now when it comes to the position that the country is in. I was wondering why you came in with such a big smile. I am now understanding where that happiness is coming from. And I think every Zambian watching this will also share in that pride and joy now, understanding what debt restructuring really is about and where it leaves us as a country and as individuals as well, because we're part of the great, sovereign state called Zambia. Thanks for coming through. And unless there's anything else you want to add?
No. I just wanted to quickly summarize under a minute.
Please do.
To say restructure means you're going to free up resources for the nation. Those sectors that were underfunded will get greater allocations. It means lesser dependency on the domestic money markets, and you expect that in the long term, interest rates will start to come down. A predictable environment, you expect a stabler exchange rate. When you deal with these factors, then the other things follow, your fuel, because remember, your fuel price increases sometimes are a function of dollar rates and all that. So it's a chain, but the work has just begun. There's a lot that we need to do, and private sector drives growth, and they're the ones that should now be thinking about initiatives to grow this economy, and it just improves our sentiment out there. Like in the international markets, they look at us differently, and
investor confidence.
With this new financial architecture that is coming, I think it does open credit lines for Zambia, and we hope to see Zambia grow to levels above 7%, of course, after the full debt stock is restructured. But I think that my only advice is that we need to rally behind the authorities, especially when they're doing the right things. There's a lot of criticism, but context, very important. Let's be aware, let's understand what the implications are, before we can criticize and just comment anyhow. But I'm so excited about where Zambia is going. Thank you.
Great stuff. Mr. Mutisunge Zulu, thanks a lot for coming through to Zanaco Unplugged. And Mr. Mutisunge Zulu is the Zanaco Chief Risk Officer. And he was explaining to us, I believe, in what I feel were layman's terms as to what debt restructuring is. And I believe more of us now understand what debt restructuring is all about and why the country is excited. And I'm sure going forward, we'll now, hear about debt restructuring with a more open and enlightened mind. To the next episode, have a lovely day.